Hello guys, thank you for joining my channel. This is my first video on this YouTube channel. Some of you maybe read my articles on TradingView, and today I decided to start the new video format for my trading ideas content. Before we get started, I want to remind you that nothing from this video can be interpreted as a financial advice. All ideas which you will hear in this video, it's just my own opinion about the market. So let's get started, guys. Today we're going to observe the Bitcoin, what I'm doing right now, what we can wait in the next week, next months, and when will this bear market end. So first of all, I want to notice that the Bitcoin is closing the ninth candle as a red candle on the weekly time frame. It's a very rare situation. I cannot remember even when it was earlier. So as a result, I can use these 9 red candles in a row as a first evidence that the market is need the correction. We can see that one of these candles looks like the bullish hammer on the higher volume. It means that the price is dumping, and the big players stopped this crash, and I think that they took a lot of long position. We will talk about it later, and they are thinking that the market will be grow. At least we will see the technical bounce from this point, something like this. So what we can see globally, let's use the Fibonacci, let's use the Elliott wave analysis. We can see the wave 1, wave 2, wave 3, and wave 4 potentially, and wave 5. So why I drew these Elliott waves in such way? You can find it that it's incorrect drawing, but I want to remind you that in the Elliott wave concept there was a 5-wave formation called the terminal diagonal triangle. It's a formation which formed the downside triangle, and the wave 1 is the longest wave, the wave 3 is the middle wave, and the wave 5 is the shortest wave. So as a result, the axiom that the wave 3 cannot be the shortest wave completed. Moreover, you know that in wave 3 usually there is a highest volume, and we can see that the volume came to the market only in this wave, and as a result I think it's a wave 3, not wave 1, not wave 5, it's wave 3. And so I expect the bounce, the bounce prices, bounce targets we can measure with the Fibonacci retracement tool. If we apply the Fibonacci retracement, we can see that the area between, with the area between 0.38 and 0.698 Fibonacci retracement levels is our target level for this correction. And after that I expect the downside move to the Fibonacci extension of 0.18 and 0.27. Sorry. This is my overall market view. I expect now the technical bounce and the final crash, which will end this bear market. Let's take a look at the daily time frame to understand what we can anticipate in the next week. I can divide almost the same situation earlier. We can see the crash right here and the falling wedge right here, and we saw the pump after this falling wedge formed. Now we can also see the crash on the huge volume and the falling wedge after that. Why usually these falling wedges are broken to the upside, not to downside? This is a market psychology. When after a huge crash we're seeing this Bitcoin weakness, this is weakness because the price makes lower highs and lower lows, and every trader expect some more crash after this wedge breakdown. But if we take a look at the fear and greed index, it's extremely fear. It's 14. It's only 14, and for the last 3 weeks the fear and greed index is staying in the range between 8 and 14. I don't think that we will see the crash when the market scares. I can tell you that retail traders feel the fear. They are not going to open long position from here because they really scared. I can also understand this because most of comments in the trading queue are bearish. They told me that I'm crazy, that I'm waiting for the bounce. They told me, okay, we will meet at the $20,000, and we will meet at the $20,000. But I don't think so. We will see $20,000, but not with this way. With way, I can see. I can think. I want to show you the Bitcoin longs and short positions on the Bitfinex exchange. You know that it's institutional players. Last summer we saw that the Bitcoin longs on the Bitfinex exchange was at 80H, and after that we saw this pump, and on the ATH on the Bitcoin we saw the most of these long positions were covered, and now we can see that the huge pump on this Bitcoin longs chart on the Bitfinex exchange. I think that institutional guys are clever guys, and they suppose that now the market will not dump like this. Also, we can add the shorts on the Bitfinex exchange. We can see that before the crashes, usually there were a lot of short positions, for example right here, but now the short position are covered during this trading range. If we see another one leg down, which will collect liquidity below this local low, we can see that on the MACD histogram will be the very strong bullish divergence. This is extremely strong signal, guys. I think that if we will see this signal, the pump after that will be up to the $40,000, maybe, and only after that we will see the crash, the new crash, the terminal phase of this bear market. Also, if we take a look at the S&P 500 index, you know that this index is highly positive. It has a high positive correlation with the Bitcoin, and we can see that it have already demonstrated as the technical bounce, but Bitcoin did not. But I think that Bitcoin can demonstrate as the same thing, because it can be the lag in the timing. Only after they're reaching the 0.618 Fibonacci level, we will see then another one downside impulse on the S&P 500, and this impulse, I think, will coincide with the terminal bear market phase on the Bitcoin. The DXY chart also show us that we can wait the technical bounce on the Bitcoin, because you know, when the DXY index is decreasing, the all risky assets, for example SPX and Bitcoin altcoins are growing, and I think that DXY can reach 99 level. It's 0.38 Fibonacci level before the new final impulse to the upside. Well, guys, to sum up, I want to tell you that you are not, that don't panic now. Right now, I don't think that we will see this crash. I think that we will see something like this scenario, maybe without this another one leg down. Don't panic. I am now in a long position. If we will see this leg down to, right here, I will buy more Bitcoins on the spot exchange, or the maybe on the futures market. And so I want to catch this technical bounce, and here I will I'm going to find the proper entry point for the short position to catch this potential final bearish movement. Please support me with your likes, comments, and subscribe to the channel, guys. Thank you so much for attention, and goodbye.